What's going on, everybody? Welcome into a special Saturday, January 25th, 2025 edition of the Daily Energy Newsbeat Stand-Up. It was a long, great week. We had a lot of stories. Trump taking office, all what's going on with him. We've got all the different actions that he's taking. Well, things remain to be seen. Oil prices were up, so it's been an absolutely busy week. I held down 2 solo shows, so I apologize in advance for that. But I'm going to go ahead. We got the team queuing up some of our best segments from the week, so I'm going to go ahead and turn it over to that. Quickly, though, guys, as always, energynewsbeat.com. Hit the description below. Sign up for the Substack. Invest in oil.energynewsbeat.com if you want to get access to better oil deals. But other than that, guys, we're going to let you get out of here. Start your week. Thank you for making us part of your weekend, and we will be back in the chair Monday morning.
Hey, let's start with drill, baby, drill. Drill when fiscally responsible. When U.S. shale capital discipline outweighs Trump's pro-growth rhetoric. It's an interesting article, and this actually comes from Rystad Energy, our folks over there at Rystad. There's 3 main bullet points, Michael, and then there's some details in here. U.S. shale producers are focused on capital discipline. Really? We've been saying this for quite a while. And shareholder returns. Increased Permian rig activity is unlikely due to significantly boost production due to inventory depletion and efficiency concerns. I believe this great man has been talking about that. I believe his name is Michael Tanner. Oh, yes, thank you. Sorry. And then the U.S. is already on track to meet Besant's 333 hydrocarbon production target without policy changes driven by NGLs and gas. I'll tell you, the growth could come at the expense of a capital spending more than $11 billion, while Permian reinvestment rates are also expected to edge higher during 9% points. It's pretty interesting. I love the folks over there at Rystad. They normally have some good stuff.
No, they have great stuff. I love this look because, again, I think it piggybacks off what we've been saying here on the podcast, Stu, that, yeah, I think drill, baby, drill, while that's great rhetoric, and I think, corporate executives, as this article talks about, are going to be encouraged by this. It's not necessarily going to all of a sudden, oh, well, we got to pick up 3 rigs now. Nobody's sitting there like that. They specifically mention, Shale 4.0, which, really is a combination of the learnings from 3.0. What went on in Shale 3.0? Increase production at all costs, show production growth, show inventory. Not really what's going on now. It's all capital discipline. It's all consolidation. It's how do we squeeze the most amount of profit out of what theoretically is a declining inventory count, not necessarily declining well count, not a play on words there, but a diminishing, economic inventory at these prices. So it's going to be really interesting. I mean, this article does point out that Trump's Treasury Secretary Scott Bessent has floated an increase of 3 million barrels of oil equivalent per day as part of his broader 333 economic plan. Again, whether that's BOE or barrels of oil, who knows? As always, there is a BOE. It's a sleight of hand. If someone's throwing BOE at you, you should ask, well, give me the breakdown. What's your gas versus oil? Because you're sometimes using, it's a 6-to-1 ratio to convert gas to oil equivalent, but it's about a 20-to-1 economic conversion. So if someone's giving you BOE and they're doing it in 6-to-1, it's look over here, not over here, because it can be a sleight of hand. So it'll be interesting to see what he says underneath. But again, I think what this does is specifically underscore and things that we've been talking about in terms of Trump is not going to be able to just wave a wand and increase production, because if it wasn't like there was production being held back in the previous administration, for all the knocks that Joe Biden gets, one of them can't be, oh, he's holding down oil production. It actually increased under his administration, whether he likes it or not.
Well, the malarkey that they did under the Treasury, we'll talk about her haircut. I mean, we'll talk about her here in a second. And but the stuff that they just put out will cost a lot of people a lot of money in all this stuff. China and India scramble for crude as sanctioned Russian tankers turn back. This one is very interesting. Here's a quote out of the article. It is even likelier there will be a sustained market disruption, Fishman added. We could see a meaningful drop in Russian exports. I think that it's going to be ended fairly soon. So I don't think this disruption, in fact, I think we're actually going to see sanctions being released on Moscow because when you take a look at China and India, listen to this, have bought 81% of Russian seaboard crude exports since the invasion of Ukraine. Now, Michael, here's where it gets funny. India and China's refinery capacity has grown substantially. The US's has shrunk. So, guess who's selling Russian refined products? India and China. Guess who they're selling them to? The US and the EU. This is a gigantic can of worms.
It really is. Talk about the dark fleet. This is going to get super crazy. I think a lot of this is what you're seeing reflected in kind of the current weekly bump in prices. You know, I mean, we saw, you know, early in the week prices were above $80. We're now kind of sitting in that 77, 78 range. But you're talking about 600 or 161 tankers are involved, and about basically 2,000 shipments have been sanctioned since the old invasion. But now it's continuing to match. India and China are going to get and are already seeing effects of this being turned away. You know, it's about 1.4 million barrels of crude oil per day, according to an estimate from some London-based EA Gibson Shipbrokers Limited. This equates to about half of Russian seaboard crude exports, which is pretty unbelievable. The McQuire Group estimates that this can be even greater at 2.15 million barrels per day of global exports, which obviously could drive up prices. So it's a big old hairy mess. I don't know what's going to happen here. What's the read on the Trump admin stance on this? Are they going to keep these sanctions in place? What are they going to do?
I think it's going to be dependent on the negotiations on ending the war. It is so important for President Trump to end the Ukraine war immediately. And I think that sanctions are going to ease. Everybody's saying, oh, sanctions are going to stay in place for a long time. And the Democrats are quite honestly putting some landmines out there. They are despicable players in this whole process. But I believe that Trump is going to meet with Putin sooner than later. So I think it's going to be great. UK is in trouble. Nuclear power ambitions hampered by delays and soaring costs. The construction of Hinkley Point C and Sizewell C nuclear power plant is facing significant delays and cost overruns, jeopardizing the UK's energy security. This is not just the only things doing the UK energy security. It's called all of their bad green energy policies. They're not doing all forms of energy. They are absolutely horrific in their energy policies. They're following the German model. The UK government and EDF currently plan to fund 40% of Sizewell C, which is expected to power as many as 6 million homes once operational. Again, the problem is they let this go too long and they need the base load trying to put the renewable energy in there. And now they don't have the natural gas coming out of it. And then you have natural gas shortages in other areas. So energy security needs to be thought out more like the Saudi Arabia folks when you take a look at energy policies over a 10, 20-year plan. You cannot do what the United States has lived through 4 years of bad energy policies and then trying to do it. Don't do what the US and the UK are doing. The EU makes admission about Russian gas. Spokesperson has acknowledged the sanctioned country energy is still flowing into the bloc. Russian energy continues to flow to the EU. Particularly glass is still present in the EU. The EC spokesperson for climate action and energy, Anna Kaja, I'm sorry, I'm going to butcher your name. Token told a briefing on Monday. She noted the commission plans to issue a roadmap in late February or mid March aimed at completely ending Russian energy imports. Here's where it is absolutely going to be a little tricky. Germany, Chancellor Scholz has lost the vote of confidence, and now they're having a runoff or another election in Germany. And so what you're going to see is his opponent now is calling for cheap Russian natural gas. So Germany has totally been deindustrialized because they cannot get enough natural gas. I just had an interview with Steve Reese, who is, in my opinion, one of the foremost knowledgeable men in the United States about natural gas, the auditing, and he has talked to Harold Hamm. This podcast is going to come out and it's absolutely phenomenal. He's also talked to Toby Rice about things. They've got a cradle to grave solution where they are going to be supplying LNG to the German markets. And so that is, but it's still a lot more costly in order to get it there, but it is secure. And he did make that point home big with me. So you've got to have energy security if you're going to have businesses and industrialization.
IEA says global gas market set to remain tight in 2025. I mean, this is super interesting. This is specifically focused on natural gas, which, again, if you're concerned about what's going on in oil, it looks like supply might quite outpace demand, but what they're saying on the oil side is the demand may not be there. But this is focused specifically on natural gas. The IEA does these kind of quarterly gas market updates. Their quote was that the markets have, quote, moved towards a gradual rebalancing last year after the supply shock that followed the Russia full-scale invasion of Ukraine in February 2022. Again, pointing out that this report is talking about global natural gas markets, not necessarily the U.S. gas markets, which do remain slightly overbalanced from the standpoint of we got a lot of natural gas sitting on the sideline being flared. We're talking specifically about the global gas balance. So basically, the IEA is talking about that. The reason why they're saying it's tightened a little bit, aka that the supply is now getting back in balance with demand, is mainly due to Asia. In terms of from the demand side, Asia's their global gas demand rose by about 2.8 percentage points, or about 115 billion cubic meters in 2024, which was above the 2% growth rate that they saw somewhere between 2010 and 2020. We also saw below average growth in liquid LNG output, which really kept supply tight. And there was a bunch of kind of wild weather events that happened. This report is basically saying that the similar dynamics are expected to persist in 2025 as this new export capacity gets going. A lot of that's coming from the U.S., which we'll cover in the next segment, but also Qatar is coming online both over the course of next year and the second half of the decade. They also note that geopolitical tensions have kind of continued to kind of push volatility in gas markets. Their quote, though the halt of the Russian piped gas transit via Ukraine on January 1st, 2025 does not pose an immediate supply security risk for the European Union, it could increase European LNG import requirements and further tighten global market fundamentals in 2025. We know what's going on with Moldova and all that stuff. The quote from the IEA's Director of Energy Markets and Security, I'm going to butcher this name, Kishuk Samadori, quote, gas market fundamentals have improved over the past year, but for now we are still seeing significant tightness due to rising demand and muted growth in LNG capacity. Heightened geopolitical uncertainty adds to the risk. He goes on to say, while international cooperation on gas supply security has expanded since the recent energy crisis began, greater efforts are needed from responsible producers and consumers who should strengthen their collective efforts to reinforce architecture for safe and secure global gas supplies. So, global gas markets are going to continue to stay tight. First day, full day in office. Trump lifts pause on non-FTA LNG export approvals. This was via an executive order, which was widely expected, to basically get our LNG export terminals going. Specifically, according to the order, the energy secretary, great friend of the show, Chris Wright, is directed to restart reviews of applications for approvals of LNG projects, quote, expeditiously as possible, consistent with applicable law. The order goes on to say, quote, in assessing the public interest to be advanced in any particular application, the Secretary of Energy shall consider the economic and employment impacts to the United States and impact of security up to its allies and partners that would result from granting the application. They're also going to look at the Alaskan LNG potential, which includes all the permitting and infrastructure to get pipelines and all that done. And this, why this bleeds into what the IA is talking about is the U.S. has an ability to help wean Europe off its Russian supply, which means the security risk that everybody's scared about Russia, you can get off Russian gas and bring yourself more energy security if the United States would get its act together and we would start building these things. And it's exactly what Trump and Chris Wright are going to be doing. It's great that we have them in office. We remember that in January of 2024, the Biden administration paused pending decisions on exports of LNG to non-countries until the DOE can update its underlying analysis for authorizations. Basically, they released their report last month, but it didn't really say anything. There are several projects that will benefit from this. These include Kimmeridge's Commonwealth LNG project in Cameron, Louisiana, and Venture Global's LNG CP2 project in Louisiana. Also, the Sabine Pass Stage 5 expansion by Cheniere Energy and Energy Transfer's Lake Charles LNG export facility. And Sempra, their Port Arthur LNG export, will also benefit. So lots of great benefits if you're in the LNG space. Good for you. Trump unveils $500 billion AI Stargate program. This is, as I said in the open, on one level great, on one level spooky. Basically, with Larry Ellison, Sam Altman, and Masahiro Son by his side, U.S. President Donald Trump announced the launch of Stargate, which is a new initiative set up that is, according to reports, going to invest up to $500 billion in artificial intelligence infrastructure. Basically the three primary corporate partners, SoftBank leading the financing side, OpenAI leading the operational side, and Oracle, which is kind of leading the data center effort, have pledged $100 billion in investment, with an additional $400 billion set to be attracted over the next 4 years. The quote from President Trump is that this is a monumental undertaking and a resounding declaration of confidence in American potential under a new president. They already, Larry Ellison said in kind of an initial, kick out meeting that they already have one of these data centers, these Stargate data centers, under construction here in Texas. There will be up to 20 of them, which each span basically about 500,000 square feet, are planned to support the huge amount of infrastructure that's needed across these high computational AI systems. Trump went ahead and said he estimated that these would create 100,000 jobs across the United States. Sam Altman, who's the CEO of OpenAI or Closed AI, also named ARM, Microsoft, and NVIDIA as key initial technology partners. This was dropped actually back in 2023. The news website Information did report that Microsoft and OpenAI were collaborating on a supercomputer known as Stargate, which was estimated to cost about $100 million. It's not quite clear per se whether or not that project is connected to the new Stargate initiative that was announced today. I think it's fascinating, and the part where I think this connects into energy is where, one, obviously AI and these huge supercomputers need power, and eventually you can't hook these up to a wind farm, can't hook up these to a solar farm. You're either going to have to pipe in natural gas or start building nuclear facilities. And my guess is, because Larry Ellison came out and said that there's already one of these in construction in the great state of Texas, my guess is that they're going the natural gas route. So I think that's what this means for energy is this could become an interesting off-grid solution for natural gas companies. And it'll be interesting to see exactly where this is located, because if you can now all of a sudden, almost like a Bitcoin mine, take your gas off grid, and instead of chucking it to a, Energy Transfer, or, who's going to send it on down to their processing or fractionation facility, you're now able to take the gas directly out of the pipeline or directly from these oil and these upstream firms and power your data center. It could be a very, very interesting shift of the model when it comes to what we would consider on versus off-grid power generation. I just had a great interview actually with Eric Rice. He's the president over at Sovereign Capital, and we talked a lot about on-grid, off-grid type generation when it comes to specifically Bitcoin mining, but this type of stuff as well. I mean, if you're able to, again, take this gas that would otherwise be sold down a pipeline or flared off and use it to power these data centers, you're going to see this is truly where when companies like EQT talk about the artificial intelligence boom as it pertains to the natural gas market, this is things they're talking about specifically. So again, I think it remains to be seen how they'll power this, but this is a big endeavor, and $500 billion is nothing to sneeze at. It'll be interesting to see. We did see Elon Musk in a tweet war with Sam Altman basically say, hey, you don't even have less than 10% of this $100 billion raised. And Sam kind of quipped back at him. So again, it'll be interesting to see how this works. We know Elon Musk is no fan of open AI, or as he calls it, closed AI. So we will see what happens.